Well, welcome to winter. Certainly it's chilly, we're all rugged up, and welcome to the winter selling season. Typically the Queen's Birthday long weekend signals the start of that slower winter selling season, and well, perhaps if anything we had a quieter start to the season than usual. Certainly listing numbers are down, and we saw that over the Queen's Birthday weekend last weekend. Auction numbers in Sydney and Melbourne well down, not just on what we'd expect to be the previous weekend's offerings, but also a year ago. In fact, weekend numbers, or Queen's Birthday weekend numbers, are the lowest we've seen for nearly 5 years. So the sellers are also feeling the pinch in terms of confidence, and those clearance rates are again, as expected, well down. Sydney clearance rates a little bit better last weekend, 55%, up from that very low 52% the previous weekend, but Melbourne down, clearance rate of 55%. But look, low numbers. The regional results are quite volatile because of low numbers. But interestingly enough, in Sydney we saw the usual suspect, the lower North Shore, producing one of the better results. The South was the top performer, and in Melbourne the inner city produced the top result. In fact, a 90% clearance rate, which was again off low listing numbers, just 11 auctions conducted. But I think the inner city's been a strong part of the Melbourne market this year, and a lot of that is unit development, and units are certainly still finding buyers. So quiet start to the winter selling season, which is typically the pause period during the year. And this weekend in Sydney we're going to see just over 600 auctions, in Melbourne just over 850 auctions, and again those numbers are well down on a year ago, and it'll be interesting to see how the market pans out through winter. But certainly it's looking like a much better prospect for buyers this year. In fact, the best winter market for buyers perhaps in 5 years. But we also had some data out this week, important data. The ABS released its lending data for April. We'll look at it in two phases. Of course, the first was which is important, the first home buyer lending. We saw no surprise that first home buyer lending again is up strongly. All state markets are recording increases over the first 4 months of this year compared to the same period last year in the number of first home buyer loans approved. New South Wales well ahead, up over 80% in terms of increase in activity in those year-to-date comparisons. The ACT up over 60%, and Melbourne up over 30%. So some very strong activity from first home buyers. Of course, it's a result of those incentive schemes in New South Wales and Victoria. We've had stamp duty cuts that have brought more first home buyers into the market particularly. And it's interesting now that when we look at the proportion of first home buyer activity in the marketplace, that's the proportion of loans, first home buyer loans versus total lending, we can see that only New South Wales is below the long-term average now. So all states are just about at or above the long-term average for first home buyer activity. So I guess that hits on the head a little bit the promotion of an affordability crisis in Australian housing. Of course, New South Wales still remains below long-term average. Just over 8% of all lending, residential lending, is for first home buyers in New South Wales. That's well below the long-term average of 12%. But of course that reflects the high prices, particularly in the Sydney market, which is still a barrier for first home buyers. So first home buyers looking good on the latest ABS data. The ABS also released investor data. Of course, no surprise that investor lending continues to fall. Those actions by APRA, of course, restricting lending, has pulled that part of the market down. But also it's a natural process of the easing of the cycle, with prices declining, prices growth certainly easing. That's always a factor in seeing fewer investors. But of course, as I mentioned before, we've got more first home buyers, and that's typically that rebalancing act. So if we look at the year-to-date comparisons, all states are below investor lending over the first 4 months of this year compared to the same period last year, with the exception of Tasmania. We know Tasmania is going through a very strong revival in its housing market activity. But it's interesting, if we look at the market share locally for investors, we can see that in New South Wales still leads the charge with over 50% of all lending in New South Wales going to investors, and that's certainly well ahead of any of the other proportions from state markets. So I guess New South Wales still is that favoured destination for investors. And if we look at the national market share for investors, 50% of all lending in Australia for investors is still heading into that New South Wales market. So despite the challenges of higher interest rates and restrictive lending through those APRA policies, we're still seeing a predominance of the New South Wales market and of course the Sydney market in terms of investor interest. But look, into the winter market now, perhaps it's a good period for both first home buyers and investors. They don't have to, I guess, struggle with the competition as those owner-occupiers typically pause, the majority of them pause during the winter months. So it's a good time for buying for investors and first home buyers. The issue, of course, will be choice, whether the variety of property there is suitable for first home buyers and investors. And we'll probably have we will have fewer choices this year through the winter market. So onwards and upwards. And I guess the late breaking news was that the US have announced that they've increased interest rates again. So official interest rates in the US now are above that of Australia, the target. A little bit of a risky play by the US, the second rise we've had this year. And they're still concerned about, as we are, with incomes growth, but they've decided to roll the dice. And as I said, perhaps some risk involved in that, given that there's just a sense of fragility in that American economy where the labour market is certainly very strong, but as in Australia, incomes growth is very weak. And the last thing a household needs is higher interest rates. But however, it certainly will add to the debate about where interest rates are going in Australia. So we look forward to the challenges going forward in the winter market, and we'll catch up next week.